The following is intended for informational purposes only. It is intended to supplement classroom training and documentation. It should not be relied on as a replacement or substitute for classroom training with a live expert instructor. Welcome to Lesson 9, Exploring Further Form Type Rule Events. Here we'll be looking at some more form rules which are going to be plugged in not on the validation or post step, but rather in the pre-processing or the ready for posting, adjust, transfer, and reverse events. And we will see that we will have the ability to save the person and account information at the start of the form creation, even if it has not been gone through the life cycle of validation yet, through the pre-processing form rules, and then we'll have some ready for posting form rules which deal with auditing, which calculate audit information and updated assessment amount, and then some cancellation form rules which are going to be used in a scenario where we adjust or transfer or reverse a form. And we'll show examples about how we actually will go and create a form like that and go through the life cycle and see how these form rules work. I'm now going to add a new form. I'm going to put in a receive date and my personal details. I'm going to put in a name that already exists in the system. So if I did a search on 360, there's a name David Singer with an ID value with all fives. And I'm going to use that particular name, David Singer. And what I want to show to you here is, if I save this, and actually I want to add in some tax details as well. No, what we see here is that even if I save without adding any tax details, the person and the account information has already been picked up from the system. And you don't actually have to validate this particular form in order that the person and the account is associated with a tax form. The benefit of that is that if you actually did a search for this particular form, you would be able to pick up this person, this form, immediately. This is the one which we just did, the first one here, without actually validating. And the way we actually control that and define that, configure that, is that on the rules we have added in some more rules here, many more than we have, and we'll be going through one by one to define what each one of these does. But we have a rule event called pre-processing, and the pre-processing is responsible for doing manipulation even at the pending state, even at saving the data at the initial state. And these form rules run to get the check tax existence and check account. So even though we haven't done full validation, nonetheless, this information is already stored in the form. So that's the first thing I wanted to tell you about pre-processing rule events. And now we'll go on and look at a few more different types of form rules. First of all, what we're going to do with this tax form is add in, as I mentioned before, is add in some tax details. So we're going to add in some tax details. Let me put in 100,000 there. Let's say an exemption, other income, let's say 1,000, an exemption for say 3,000. So that will be 107,000. And I'm going to save that. not putting in any withholding at this moment, and let the system calculate everything for me. Let me validate and post in one go. And we've seen the validation and the posting form rules. So expectation is that it will create an assessment for me. And as you see, we have an assessment for 7646, which is the amount calculated over here. And what else do we see? We see that the actual balance is 9,000. If we want to understand why that is, that's because of P&I. If I go to my P&I details over here, I can actually bring up the account that I'm using. A minute. Let's see if we can. So I'm not sure why I can't get to P&I. So let us try now to go to the P&I detail view. Let me put in the obligation that we just created, and if we look at the calculations, we'll see that we have interest, failing to file, failing to pay, all different, which adds up to 9,080. And that's why we have 9,080 over here. Okay, so that's the reason, because you have some interest charges, failure to file, failure to pay. It was filed a few years late, and so on and so forth. So that is what we have seen previously. And now what we're going to do is look at a few different changes that we could make to this form, and look at the form rules which are associated with those changes. First of all, one which isn't related to a form rule, but you could change the receive date. Let's say I changed my receive date from today and moved it to, let's say, the 1st of 2011. Which means that it was filed on time. The expectation, therefore, will be that we will have less P&I charges, and the account should have a different value balance. So 9,400. If I look back at my P&I here, was 9,600, 800, and if I refresh the details, we should see that the failure to file penalty should go away, because I failed, I actually filed on time. So I have to do a calculate over there. And there you see it's gone to 9,400. Okay, so that's the first thing I wanted to show you, a change in receive date. The next thing I want to do is do a do an adjustment. You can adjust the tax form, which, as a result of adjusting the tax form, what will happen is that this particular form will be moved to adjusted state, and all the adjustments related to this form will be cancelled, and then you will be able to create a new form. So if I click on adjust, it'll ask me, why do I want to make an adjustment? And say I want to make a correction. What you'll see now, you'll see that the balance is 0. If you look at the logs, you're actually looking at the wrong log. Sorry. You first of all have to go to the two different tax forms now. There is one which is the one which is adjusted, okay, that's the one we just adjusted. And now, and if you look at the logs, you will see that they show you that we cancelled the assessment. And then what happened was that a new adjust to tax form, a new tax form was created, and the tax form which has been created in pending state is this one over here. There's one reverse, but that is an old one which isn't related to this. And when I move this to pending and look at the pending one, you'll see it has all the same information they had previously. So if I actually want to make a change, I could edit this and make a different I could change the let's say exemption to 5,000, and therefore my tax should be 105. And I save this, then we should get a slightly different assessment. So then you can post it. If we look at the tax details, what you'll see is that initially it was 107 on the original form, and then we've adjusted to 105, and there's a difference in your assessment as a result, and a different assessment has been created. Okay, so what happened is that when we moved from the posted state to the adjusted state, the original adjustments were cancelled. And you will see that if we go to a form type and I go to my rule event adjust, you'll see that we have a form rule saying cancel adjustments, and basically it cancelled all the adjustments that was associated with that form. So going back to the form here, I'm now referring to the adjusted form. There's a form rule which cancels the adjustments, and if you look at the log, you will see the assessment cancelled. It tells you it's being cancelled, and and therefore balance was 0, and then a new tax form was created with a different amount. So that's the first thing I wanted to show you regarding the form rule, which is set on the cancelled step, on the adjusted step, sorry, on the adjusted rule event, which cancels adjustments. Next, the next thing I would like to show you, if we go back to the adjusted, go to the posted one. The first thing I would like to show you is that we can also create an audit for this particular obligation for David Singer, and what we're going to do is create a audit case for this particular obligation, and then we're going to click on audit, and it will create an audit, and I'll show you what happens as a result. Okay, so let me go here and create an audit case, a new audit case for David Singer. I'm going to do an individual audit case. And I'm going to start it at the beginning of 2010, leave it open-ended. Fraud, let's say the reason is that we think there are some questionable credits. It's an internal review. I pick up the obligations which are under audit, and let me save that. So I have an audit case for David Singer, and now I'm going to attach it to this particular tax form. How do we do that? Well, I'm going to click on audit. So I'm taking this posted form, click on audit. I'm picking up now the audit case, which I just created for David Singer. And what we're going to do now is, you see the associated audit case is shown over here. I have a pending audit. Okay, I now have a pending audit, and what this will do, what I do in it is basically make changes to the actual tax form. And let's say I go to my tax details and I think, hey, this value which was changed, the adjustment that we made from 3,000 to 5,000 is incorrect. It really should be 3,000, and we're going to put it back. That in itself, I believe, is, if we validate it, that will actually error, because now the value isn't correct. It has to add up to 107,000. So I'm going to edit that again. Make sure the total taxable amount calculation is correct. Let's go back to that and change that to 107. And now when I validate, what you will see is that we have a new section called Estimated Balance Details. And it shows you the particular 186 different assessment, which is now created because I had a difference of 2,000 credit, which I actually changed. And as a result of that, there's going to be a proposed assessment for $186. In fact, you can actually even see how that 186 will play out, let's say, in the future. If I want to see, hey, will I have any P&I? You can even see what the P&I impacts will be, interest, failure to pay, and be 232 in a year's time, as a result of the audit. So if I now post this, it will create another assessment for the extra $186. So David Singer now has actually two assessments associated. It has an original assessment, which is the posted one over here. The reversed and adjusted ones are equal to 0, and we also have an audit one. Okay, and that makes up the total with P&I of the balance. Now the question is, the particular form rule which calculated for me what the audit assessment would be comes from in the form type. If I go to the pre-processing, I go to ready to post, you will see that there are two form rules. The first one we haven't dealt with. It's related to setting a field in the underlying tax form table of tax owed overpaid, which is used by other form rules. But the one which we now had used to calculate what the audit assessment will be is this particular form rule. And this form rule defines basically what you need to define, where I get the assessment amount from, and what actual adjustment types you will use. Okay, so this is the form rule which is used in order to calculate the audit assessment amount. Okay, so now we have a David Singer, as I said, with an audited form, tax form. If you remember, originally it was set to be to be a certain amount, and we made a change, and then the audit changed it back. Now, you can also, what else I would like to show you is the ability to reverse if you want a form completely. If I want to actually remove this audit, I could hit reverse, and what will happen now is that not only will all the all the adjustments be deleted, but if possible, also the obligations and the tax roll as well, which are created. So let's say I say incorrect posting on my audit form. You will see what will happen, that the particular audit is now reversed, and the adjustment has been cancelled of 186, and the balance has changed as well. Now, the obligation tax roll still exists because we still have the original posted one, which has the original assessment. And if we wanted to, we could actually reverse this one. And now, in this particular case, what we will see that the assessment for 7,000 will be cancelled, but also the obligation and the tax roll can also be cancelled because there are no further adjustments associated with the obligation. And now, since the obligation can be cancelled, so can the tax roll. So what you see now is that this tax roll, the obligation, and is actually still active. And I think the reason why this is active is because there's actually another form related to it. But the concept of cancelling or reversing a form is that it will cancel all the adjustments which have been created on the tax form. And then if the obligation now has no further adjustments related to it, then it can also be cancelled. And if the obligation can be cancelled, so can the tax roll. Okay. Just to show how that works, let me do one more form. And I will show that concept of cancelling the obligations and the tax rolls related to by using something called transferring a form. So let me show you that. If I go to the form, let me add a new tax form, completely new one. So let's say I put in, I'm going to create an going to do a simple tax details now and put total in here. I'm not going to save that. Now I'm going to post it. And validate and post in one step. A new person will be created, a new taxpayer, a new account, a new tax roll will be created. Okay, so we have a assessment for just under 7,000, and then we have a balance of more than that, obviously to 9,000 related to P&I. Now, what I want to show you here again is the ability to cancel the tax rolls and the account and everything, and I'm going to show that by looking at transfer. And transfer is actually cancelling this form and moving it to another person instead. So let's say I want to say posted to wrong taxpayer. Now what will happen now is that the tax roll and the obligation should now be cancelled. Okay, so this shows you it's transferred from. We have now created a new one in pending. If I actually look at the original, you will see that it's transferred to tax form over here. We will see in the log that the obligation has been cancelled, the tax roll has been cancelled, because there are no associated assessments anymore. So if I clicked on the tax roll, you will see that the tax roll has been cancelled, and and the obligation has also been cancelled. This one's been transferred. If I go to obligation, you'll see the obligation has also been cancelled. So there are two forms now associated with each other. Let's say I want to now go to my transferred, posted to the wrong tax. I can go transfer to tax form, a new tax form. And now if I edit it, let's say I change the person because the person was wrong. David Summers was, let's call him Winters. And let's change this to something else and save it. And even though you see that there is certain information which is associated with the other person still on the form, but when I do a validate, it now will update it to the right information. Okay, so therefore when I actually do a post, it will create a new account for this new person with the with the same tax details information which were on the original account, the original tax form. Okay, so now it's changed to David Winters instead of Summers. And the form rules which are used for this are found under the rule events, the adjustment as we saw earlier. Let's just go through and see what they do. It just cancels the adjustments, but the ones for reversing and for transferring cancel the adjustments and then try to see whether we can cancel obligations and the tax roll, but can only do so if there are no further adjustments on it, so that then you can delete the cancel the obligation, and also as well if there are no further obligations, then the tax roll can be cancelled. So therefore we found an example where sometimes the obligation and tax roll can't be cancelled, and sometimes it can. So just to sort of summarize, if we look through this list over here, we see we have, just going from the top downwards, we have the adjustment which cancels adjustments. The posting is what we had previously, we saw in earlier lessons, and creates all the particular entities necessary, as well as the assessment and the adjustment, and a withholding adjustment in this case, and payments too. Pre-processing allowed us to actually find a person, a taxpayer, and an account when we saved the form, even before validation. Ready for posting, we saw the calculate audit assessment, which was used to calculate an assessment adjustment when we did an audit example. The one here, tax owed overpaid, we haven't looked at, we haven't shown an example, but we do have a form rule which is related to creating an overpayment, and the create an overpayment uses the field on the base table tax form, which is called tax owed overpaid, and therefore this particular rule moves that information onto that base field on the field on the tax form. So that's what we have on ready for posting. On reversing and for transfer, we just mentioned before, we cancel adjustments, obligations, and tax roll. In validation, we are doing all the validations necessary to check to see whether we have a person existing, an account, and tax roll. This particular one is slightly different than the pre-processing. Pre-processing doesn't have determined the filing period information necessarily yet, and therefore it won't be able to pick up the tax roll, but it does have enough information in the pre-processing to calculate the taxpayer and the account. But in the case of actually validation, we have also the filing period determination, and that also brings back the tax roll and also the obligation if it exists. And then finally, we have all the different types of validations referring to line validations. The conditional form rule, which does the calculations, either automatically updates it with an autocorrect, or it actually makes sure that we've done our calculations correctly. It also has the form rule, which calculates the actual tax amount using the rate schedule. There are actually a couple of extra form rules, existing base form rules, and you could look those up and see and use them. Again, this was just simply an example to show the most common ones. So what have we seen in this lesson? Well, we've seen quite a few new form rules put into plugged in at different rule events. And one of the important things just to point out is that you can use the same form rule group across multiple rule events. You don't have to actually use different ones just because you're reversing or whether you are actually adjusting. You can use the same form rule group to cancel the adjustments, for example. Another thing to realize is once you've created a form rule group, that form rule group is available to use on multiple form types. As long as the form type has the same underlying sections and lines, then everything should work correctly. Okay, so it doesn't necessarily mean that you have to recreate form rule groups every time you create a form type. As long as the structure is the same, that form rule group should work okay.